Hello everyone, happy holidays! I want to illustrate a tax saving strategy for 2025, taking into account recently implemented changes to the tax law. You still have time to do it before this year ends. I want to note that the strategy does not work if your income exceeds $500,000 or the sum of your California withholdings already exceeds $40,000. Given changes to itemized deductions, many more California residents will be itemizing on their tax returns this year. The new tax law increases the amount of state taxes includable in the federal itemized deductions from $10,000 to $40,000. Thus, if the amount of state taxes that you pay, including income tax, property taxes, or state disability insurance, exceeds the amount of standard deduction for your filing status, you will be itemizing on your tax return this year. The standard deduction will be $15,750 for the single filing status and $31,500 for the married filing jointly filing status in 2025. So, if you usually have a balance due at the state level, which you would normally pay by April 15 next year, I suggest that you should prepay right now in 2025 before this year ends. This will allow you to increase your federal itemized deductions by this amount and deduct more at a higher marginal tax rate. Let's look at an example. So pay attention to the table on the screen. Let's assume that your gross income or your GI is $150,000 for the single filing status or married filing jointly filing status. Then your federal marginal tax bracket will be 24% for the single filing status and 22% for married filing jointly filing status. So, if you prepay $1,000 to California before December 31st, 2000, you can save $240 in federal income tax if your filing status is single, or $220 if your filing status is married filing jointly, based on the marginal tax brackets. You can definitely pay more state taxes before the year end and artificially inflate your federal itemized deductions. Then you will get overpaid taxes as a state refund in 2026, but you should understand that the refund may become taxable at the federal level in your 2026 federal tax return. Now let's discuss charity. So if you itemize your federal deductions due to higher allowed state taxes, adding charity on the top of that will further increase your federal tax savings. So in our example, if you donate $1,000 in 2025, you will increase your savings by $240 for the single filing status and $220 for the married filing jointly filing status. But it's important to note that charity rules are changing from 2026. The IRS introduces a deduction floor of 0.5% of GI, your adjusted gross income. This means that in 2026, charity contributions will be includable in federal itemized deductions only after reducing them by 0.5% of your income. This is shown here. So this is 0.5% of $150,000. So in our example, while you can save $240 in federal taxes in 2025, the same charitable contribution will save you only $60 next year in 2026, because you will need to reduce it first by 0.5% of your GI. So we deduct 750 from 1,000, and then we apply the federal tax rate to the difference, so only to $250. On the other hand, if you don't itemize your deductions, there is no sense in accelerating your charitable contributions before the year end, so in 2025. In the 2026 tax year, non-itemizers will be allowed to increase their standard deduction by $1,000 for the single filing status and $2,000 for the married filing jointly status for charitable contributions without any income floor. So, thanks for watching and see you next year. Bye bye.